Hi, I'm Jono, and today we're comparing TD Ameritrade and Ali Invest.
One was built by a man from Nebraska with $12,500 in startup capital who created the best retail trading platform ever made and sold it for $26 billion. The other was a car loan operation for 90 years that nearly collapsed, took $17.2 billion in taxpayer money, and rebranded as a bank. One had its programming interface shut down permanently, forcing thousands of automated traders to rebuild from scratch. The other destroyed 22.6 million business communications that were unavailable for 39 regulatory inquiries. One sweeps uninvested cash at less than 0.5%, while competitors pay over 4.5%. The other sweeps at 0%, while its own savings account in the same login pays 3.5%. Both were acquired, both lost what made them distinctive. The first company was founded in 1975 as a phone-based discount brokerage. The $8 flat rate online trade in the mid-90s changed the industry when competitors were charging $65 or more. A Canadian banking group acquired a 39% stake in 2006 for approximately $2.9 billion. The $606 million acquisition of an options platform in 2009 brought institutional-grade analytics, a scripting language, and a culture that attracted serious traders. A further acquisition in 2017 for approximately $4 billion doubled the client base to 12 million. TD Ameritrade was the second largest retail broker in America, with the best active trading platform in the industry. The entire retail commission model collapsed in 72 hours in October 2019. 6 weeks later, the largest retail broker announced it was buying the company for $26 billion. During the meme stock event of January 2021, the platform raised margin requirements on volatile stocks, but did not halt cash purchases the way a smaller competitor did. That distinction spared it from the worst of the congressional backlash. The migration began in September 2023. One account showed 60,000 less than it should have for 13 months before the ticket was closed without resolution. Another displayed a phantom margin call between 10 and 30,000 that blocked all withdrawals for 2.5 years. Custom scripts did not auto-transfer. Alerts stopped firing. The programming interface was shut down on the 10th of May 2024. The cash sweep landed at less than 0.5%. The securities regulator had already fined the acquiring broker $187 million for the same cash practice. The second company was created in 1919 so that a car manufacturer could sell more vehicles through installment financing. For 90 years, the entire business was auto loans. Expansion into subprime mortgages in the 2000s nearly destroyed it. $17.2 billion in government bailout funds followed. The taxpayer owned nearly 3/4 of the company at its peak. The rebrand in 2010 was designed to escape the association with both the car manufacturer's bankruptcy and its own near death. A $100 million discrimination settlement for charging minority borrowers higher auto loan rates landed while the new brand was promising to do right by its customers. Ali Invest was born when the company acquired an independent retail broker called TradeKing for $275 million in 2016. TradeKing had been known for low commissions, strong options tools, and a community that respected its traders. What the community gained was banking integration. What it lost was its independent identity, the forums traders had built, and the sense that the broker existed for them rather than as a retention tool for a bank. The cash sweep pays 0%, while the savings account in the same login pays 3.5%. The free automated portfolio product holds 30% in cash, which over a decade on 100,000 costs approximately 46,000 in foregone returns during a typical growth market. One account holder reported their balance showing 0 for 3 to 4 months, despite holding securities. Another reported a 50,000 daily transfer limit, blocking larger withdrawals from the investment account. The financial industry regulator fined the brokerage $850,000 in October 2025 for destroying 22.6 million business communications across 6 years. 39 regulatory inquiries were left without the records they needed. A data breach in 2025 exposed 4.2 million customers. The parent company faces ongoing credit stress from used car loan defaults. The stock fell approximately 11% in early 2026. Both platforms were acquired and both lost what made them distinctive. The first was absorbed into a larger broker that wanted its options platform and its 12 million accounts. The second was absorbed into a bank that wanted its customers to invest without leaving the savings ecosystem. The first still has the most capable retail options analytics available. The second has seamless banking integration that no standalone broker can match. The second charges less per options contract than the first and waives exercise and assignment fees entirely. The first offers futures trading, the second does not. Neither platform exists in the form its original users chose. The cash sweep is the shared failure. The first pays less than 0.5%. The second pays zero. On 100,000 in uninvested cash, the first earns 450 a year, while a competitor pays 4,500. The second earns nothing while its own sister savings account pays 3,500. Both platforms extract revenue from the gap between what they pay and what the cash is worth. The securities regulator fined the first platform's parent $187 million for this practice. The second has not been fined for it, but the structure is identical. The first platform's regulatory record is the cleanest in the series. One self-reported trade reporting fine of $550,000 for pre-merger conduct. The second platform's record includes 22.6 million destroyed communications, a data breach affecting 4.2 million customers, and a parent company with a $100 million discrimination settlement. The first platform's migration created documented account errors that persisted for years. The second platform's account holders report balances showing zero for months and daily transfer limits blocking withdrawals. TD Ameritrade for anyone who needs the most capable retail options analytics, where the scripting language, the probability tools, and the paper trading simulation still outperform every competitor, where the acquisition preserved a platform that could have been shut down, and where the education library remains the deepest in the industry, accepting the migration errors, including a 60,000 discrepancy open for 13 months, a phantom margin call blocking withdrawals for 2.5 years, the programming interface shutdown, and a cash sweep paying less than 0.5%, while competitors pay over 4.5%. Ali Invest for anyone who already banks with the parent institution and values seamless integration between savings and investing, where instant transfers in the same login offer a convenience advantage, no standalone broker matches, where the options commission undercuts the 3 largest competitors, and where exercise and assignment fees are zero, accepting the 0% cash sweep, 22.6 million destroyed communications, 4.2 million customers exposed in a data breach, and a parent company that was built as a car loan operation, required $17 billion in taxpayer money, and settled $100 million in discrimination charges. One was the best trading platform ever built, now degraded. The other was never built to be a trading platform at all. Every choice is a trade-off. At least now you know what you're trading.